Thank you very much for giving me the opportunity to talk about Japan. I'm afraid the technology in Korea advanced than Japan. I'm sorry. Okay. So I'm very honored to be here, and I'm so surprised that this seminar was so big. And I'm a little bit nervous about that. And I would like to talk about the outlook of Japanese economy and the Japanese equity market. And but I'm sorry. Let me introduce myself. My name is Tadahiro Fujimura, Chief Investment Officer and Senior Fund Manager of Sparks Asset Management based in Tokyo. And Sparks is the largest independent asset management company in Japan and the only listed asset management company. And the Cosmo Asset Management in Seoul is our business partner. The reason why I talked about my introduction is different from other speakers. I am not an economist and officers, so I cannot provide detailed analysis of the economy of the market. But instead, I can provide you the atmosphere of Japanese current economy. Our approach is pure bottom-up researches by ourselves, visiting companies, discussing with top management, visiting factories, restaurants, shops as much as possible, and feel the market. And through our researches, I believe Japanese economy will keep the good economic environment. But please be careful. I am a fund manager, always optimistic about the market. So please discount my words. Let me summarize our presentation in this slide. First, Japan is on the track of organic recovery regardless of further weakening yen or further monetary expansion. We don't expect further aggressive policies. And both corporate sectors and the individuals have a healthier balance sheet except government, and these private sectors are ready to spend their excess cash. That will push up economy. And the third, Japanese corporate earnings is expected to grow more than 10% in our forecast, even excluding the impact of further weakening yen. And lastly, looking at the stock market, we expect the Japanese stock market to respond to the strong fundamentals toward the end of 2014. And another important point is demand situation of Japanese stock market. In Japanese equity market, domestic investors have been sellers, and only foreign investors are buyers in the Japanese stock market. But finally, we observed that the Japanese investors start buying own country equities. That's a very important point coming forward. Let me use following slides to explain details. This is a terrible chart. And this chart shows the Nikkei's movement since 1989, which was a peak of Japanese stock market. We faced the terrible deflationary environment, and the stock market have been declining past 25 years. And especially in 2003 or 2009 or 2012, the market was below the range of the market because of the abnormal strong currencies. But fortunately, thanks to the Abenomics, stock market suddenly going up more than 50% per year. And most of people, even including me, amazed about the rally. And people assume that this rally is not sustainable. But looking at the long term, we believe that still the level is not so high. And our more important point is, in our opinion, finally, Japanese stock market or Japanese economy is ending the long-term deflationary cycle and coming to the another area, normal inflationary environment. And the reason why the stock market rallied is, as you know, the exceptional expansion policy by Bank of Japan. But looking at this chart, Bank of Japan expanded their balance sheet dramatically last year, but still, compared to the other major countries like US or England, still Bank of Japan have room to expand their balance sheet. Then the question is when the Bank of Japan will execute another policies. I'm sorry, I don't know. But I think Bank of Japan will play an important role in the market, protect downside risk of Japanese economy or Japanese stock market. If something bad things happened, Bank of Japan will trigger the gang to expand their monetary policy. So I believe next few years, Japanese stock market is safer, relatively safer market because of the Bank of Japan's waiting. Let me talk about the balance sheet of individuals or companies. I cannot say that the government debt is improving. No, but looking at the private sectors, both individuals and the companies are very healthy. This chart shows the, This chart shows the cash position of Japanese individuals and the balance sheet. The lower green bar chart shows the debt amount that counts almost 9 trillion US dollars. That is almost 80% of Japanese GDP. So that was one of the concerns by global investors. But looking at the asset side, the blue bar line shows the cash position by Japanese companies, Japanese individuals. That is 9 trillion US dollars. So huge cash position Japanese people are holding. And including the orange bar line, the cash equivalent financial items, then the asset is going to 13 trillion US dollars. That is far bigger than the debt amount of individuals. And why Japanese individuals have been accumulating this cash position? The reason is deflationary environment. Under the deflationary environment, keeping cash, waiting for buying is the best idea. And because of that kind of deflationary environment, Japanese people hesitated to spend money. But we observed that the Japanese consumers' attitude are changing. Thanks to the Abenomics, the people's expectation is finally changing. How about the Japanese companies? This chart shows the balance sheet of Japanese companies. And the green area shows the debt amount held by Japanese companies. And the blue area shows the cash position by Japanese companies. Different from Japanese individuals, debt exceeds the cash position. But looking at the trend of a debt amount shows in the green line, after the financial crisis in Japan that happened in late 90s, Japanese companies return debt as much as possible past 15 years and getting healthier and healthier. But recently, the debt amount is flat. Why? The reason is Japanese banks ask Japanese companies, please not to return debt anymore. That suffers profit. So, and the Japanese companies want to keep the relationship with banks, debt amount remains flat. Instead, because no way to return to debt, then cash position is accumulating in Japanese companies. And the orange line shows the debt asset ratio, which shows the healthiness. It's declining and declining. So both individuals and the companies have enough cash to spend and waiting for spending. But nothing happened past 5 years. But thanks to the Abenomics, finally Japanese companies getting the confident about the business environment. And the weakening Japanese yen follows the decision makings. So we believe finally capital expenditure is start improving and the consumer sentiment and the consumption will start improving. And whether Japanese society need cash or capital expenditure, I think yes. Left-hand side shows the machinery orders in Japan. Though recovering sharply, still the current level is lower than historical level. Why such a decline happened? One is the global financial turmoil, and another is the earthquake 3 years, and that happened in 3 years. And in addition, stronger Japanese yen also damaged the sentiment of Japanese top management. But time passed, and the Japanese government, Japanese companies start thinking about decision making, how to spend money. And another important point is construction spendings, showing in the right-hand side chart. Japanese society have been decreasing construction spending from 90 trillion to almost 40 trillion. Of course, the level of late 80s or 90s is too much because we spend too much construction spending that caused the big government debt. But current level of construction spending is too low. That's why we observed so many accidents in Japan. We need more construction spending to keep normal operations in Japan. And Mr. Prime Minister Abe tried to use private money for infrastructure spendings, like introducing the infrastructure fund. So even though government doesn't have enough money to spend, but using the private money, like individual money and companies' money, to stimulate Japanese economy. And the sign of the recovery are found in the other area. The easy area to find the sign is the real estate market. Blue line shows the vacancy rate in Tokyo, and the orange line shows the rent in Japan, in Tokyo, central Tokyo areas. Although rent still remains low, but the blue line, as blue line shows, the vacancy rate finally started declining sharply. So we believe this year, 2014, finally rent will increase. That will stimulate the industries. And another good sign is land price in Tokyo. First in 5 years, finally land price in Tokyo is become positive. And we believe not only Tokyo, but this positive price increase will spread among the nation this year. But one of the things we have to be careful is trade deficit in Japan or slow recovery of export. Japan used to have the huge trade surplus, but now Japan recorded a huge deficit after 2012. Of course, one of the reasons is energy price increase, but the more important reason is whether export will recover or not. And the left-hand side chart shows the so-called J-curve effect. We plotted the export movement 1 year after peaking out of Japanese yen. And in this case, in average, 12 months to 18 months are needed for recovery for export recoveries. And the current situation shows in the orange line. So finally, the export recovered after 14 months, but still the momentum is slowing down. And a lot of economists are cautious about these export momentums, whether the reason of the slowing down may be the losing the competitiveness of Japanese industries. But our opinion is not. The reason of the losing the momentum of export is two. One is a capacity problem in Japanese manufacturers. Because of the long-term deflationary environment, Japanese manufacturers decreased their capacities. So even though demand exists, but the Japanese manufacturers cannot expand their production in the short term. But we believe, as explained, the machinery orders are increasing and the Japanese manufacturers' capacity is start recovering. Then export will start going up. Another point is strong demand in domestic sectors. Because of the strong domestic demand, Japanese manufacturers cannot export their goods. So I think this export movement is not a bad sign, but we have to be careful about whether our assumption is correct or not. But good news is, please look at the right-hand side chart. Blue area shows the export amount to China. Although political relationship between Japan and China have not recovered yet, but the volume from Japan to China almost reaches the historical high level. One reason is because Japanese export dropped so deeply, then it takes time for recoveries. But I believe, as green line shows, the month-on-month level, we can keep the positive export changes past 1 year, and I believe Chinese export to China support the Japanese economic recoveries. Then let me talk about corporate earnings, which is more important in the stock market investment. Last year, fiscal year 2013, Japanese companies recorded more than 18% growth rate, thanks to the weakening yen. And the consensus estimate that this year, Japanese companies will grow about 8 to 9% as a consensus. That is a little bit below the other major countries. But in our forecast, Japanese companies can grow more than 10%, or in the good scenario, under the good scenario, Japanese companies can grow more than 12%. Why? We have three assumptions about the growth rate of corporate earnings. One is the damage of the consumption tax increase. So we experienced twice of consumption tax increase that damaged the Japanese economy after a few quarters. But discussing with Japanese companies, we come to recognize that this time, Japanese companies can manage the damage of consumption tax because of controlling sales or inventories prudently, learning the past experiences. So a lot of the consensus assume that the damage of the consumption tax will maintain about 3 months or more, but we assume that the damage of consumption tax increase almost April will end April or March. Another point we assumed is wage increase. As you know, finally, once in 15 years, Japanese labor union achieved a positive wage increase. But still, a lot of the economists doesn't count on the wage increase, which reflect to the consumption improvement. The third point is conservativeness. Always Japanese people are so conservative about assuming the business environment. For example, last week, Japanese auto industries announced that this year's auto sales about 10% reduction, declining 10% of car sales in Japan. But discussing with industries, we have a confidence that the car sales is not so big. A decline of the car sales is not so big. Considering the rational assumption, we believe only 2 or 3% of decline is a realistic assumptions. Or if our assumption of consumption tax increase control the consumption damage of consumption tax increase, then we can forecast almost flat car sales in domestic in 2014. That will push up Japanese corporate earnings dramatically. So we should not be pessimistic about the growth rate of Japanese corporate earnings. And because of protected by Bank of Japan, we believe Japanese stock market will be relatively better place to invest. And lastly, I would like to talk about the new event in the Japanese stock market. The government started a program which provides a tax break to individuals, so-called NISA, Nippon Individual Saving Account. NISA will allow account holders to invest up to $10,000 of a new investment per year, where capital gains and the dividends on equity or mutual fund will be exempted from tax. Not bond, but mutual fund and equities are exempted. And the investment amount via NISA is expected to 680 billion US with 31 million accounts in 5 years, based on the numerous researches. But looking at the recent data showed in the left-hand side, in January, the account increased to 6.5 million accounts. That is much higher than the government expectation of around 5 million accounts. That is one sign, clear sign that individuals will shift from bank deposit to riskier asset. And another point is pensions money. This is under the discussion, but the Japanese government is creating a private pension plan, taking the US IRA, individual retirement account, as a model. But this is under the discussion, so we should not expect too much about this. But looking at this US case, the deposit used to be 82%, but declined to almost 10%, and the mutual funds increased dramatically. We believe that may happen in Japan. And another point is GPIF, Government Pension Investment Fund, that have 1.2 trillion US dollars. The Prime Minister Abe pushed GPIF to change their organization and change their decision-making systems. And the GPIF will review their portfolio and increase the equity position. Or Prime Minister Abe want to use the GPIF's money for growth strategies. In any way, the pension money will go to riskier asset or used for growth strategies by Abenomics. So we believe Japanese stock market may be the relatively better place to invest. Thank you very much for listening.